Sometimes a cash flow statement problem will give you the cash proceeds from a sale of land, for example, but sometimes all you have is the financial statements in front of you because you don't have access to the general ledger individual transactions. But you can calculate the proceeds knowing everything but one variable. So in this case we don't know our proceeds, so here's how we can calculate them. We know that if we sold land, which we know that we did here because we see that we went from $30,000 down to $15,000, and we do have a note that says that no land was purchased during the period, so the only thing that happened here was that we must have gotten rid of $15,000 worth of land. So we know that in order for that to happen, we must have credited land for $15,000. Now we don't know how much cash we got, but we do look to our income statement and see that we had a loss on the sale of land. And of course this is an income statement, so this is not a debit or a credit. This is actually a loss on the sale of land. And so a loss got onto that financial statement by having a debit of $10,000. And so the balancing entry needed to be $5,000 as a debit, and that must have been the cash that we received for the sale of this land. So take a look at what we're looking at right here. What we have is we received $5,000 for some land that had a book value of $15,000, so we only got $5,000 for land that was on our books at $15,000, so that was a loss of $10,000. So by knowing these two amounts, we only had one variable, so we could solve for cash. So the amount that would show up on the cash flow statement would go under the cash flows from investing activities, and it would have been cash proceeds from sale of land, and that amount would have been the $5,000. This amount right here, the loss, would have been added back under operating activities.